Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're talking about HITI again, but specifically about some big institutional investors and ETFs which have begun establishing positions in the company and exactly what this means for investors. Now we have discussed this dynamic loads on the channel before, from when we were saying it was an exciting development which we could see and could expect from the Nasdaq uplisting, but we're finally starting to see some of it happening now. While this video is primarily focused on this within the context of HITI, there are a few things we will be discussing which are important for investing in general and for all investors, so be sure to stick around. Before we get into it, please smash a like button. In our battle against clickbaity misleading content, it's so helpful when you do like the video in letting the algorithm know that it doesn't only need to recommend the sensationalist content. It's misleading and ultimately it's not good for investing YouTube in the long run. You're doing a great job so far, so please keep it up. If you're new to the channel, then make sure you're subscribed. If you're interested in investing and learning more about it and understanding how you can generate better returns in the ways that professional investors do, then check out the new video series on the Patreon page. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So JP Morgan, Morgan Stanley, UBS, RBC, BMO, CIBC, as well as some of the largest cannabis ETFs including Advisor Shares and Horizons, have all recently begun establishing positions in HITI. We knew that the uplisting to the Nasdaq would enable this dynamic to commence, and this is now what we're seeing here. But the important thing to remember is that this is just the start. Now we will discuss this dynamic more shortly, as it's something which takes its time, but prior to the uplisting there was minimal institutional investor appetite within HITI. Now while it still is very small, the wheels are in motion for this and it's growing, both within existing investors that hold positions within the company and new ones. Currently, only around 4% of the free float in HITI is held by institutions, according to Seeking Alpha. To put this into context, 68% of Google investors are institutions, 59% of Amazon's, 70% of Starbucks, and 71% of Microsoft's investors are all institutional investors. All of those companies mentioned, institutional investors hold the significant and largest portions of the shares in those companies that are outstanding. Now, this leaves massive potential for HITI. Growth to these levels of shareholding from institutional investors would have a significant impact on the stock price, creating a large amount of buying pressure and ultimately driving the stock price up significantly. Now, clearly, those are some well-picked examples. They're established blue-chip companies, and I'm not saying that HITI will be there within the next year or even 2 years, but certainly we will see growth from the level that it's currently at. Now, a very fair challenge here that you're probably screaming at me is, Alex, HITI has some ESG challenges that mean that not every investor will be able to invest in something which is considered a vice. Now that is a really valid point, especially given the regulatory and legality debate around the sector. Some investors just can't and won't look at various sectors, whether that's alcohol, pornography, narcotics, ammunition, gambling. There are a whole range of sectors that some investors just totally steer clear of. Now that being said, let's look at some other companies in these vice sectors to see whether this is actually a valid concern. Philip Morris, the tobacco giant, has 76% of its shares held by institutional investors. 79% of the shares in alcohol giant Diageo are held by institutional investors, and 46% of investors in Flutter, the online gambling business, are also held by institutional investors. So yes, whilst a very fair and valid challenge, I don't think that HITI will be limited or restricted by this dynamic, and I think over the coming months and years we will see a significant growth in the institutional ownership of HITI. Now one thing I have noticed and that I have received a bunch of messages about is why the positions of some of these enormous financial institutions so small and why is it taking so long? Now this has been really interesting for me and it's enabled me to open my eyes to something that's actually really important. As somebody whose actual full-time office job is investing related, I'd taken for granted my knowledge of the process which these guys go through and the hoops they have to jump through in their process for building positions. Now there are 2 points to raise here and then we will dive into them in a bit more detail each. Now the first of these is the time that it actually takes an institutional investor to be able to commence establishing a position. Now this is primarily a function of the internal processes they have and that the hoops they have to jump through, and ultimately the work that they need to do to get comfort on making the investment. The second is the actual way about which they will establish their position and why this also takes time too. So first, let's talk about the processes these institutional investors go through and why this is not an overnight decision which gets made and the investment approved and the bank or fund immediately begins establishing that position. So the first step is the fund identifying the potential company they will invest into. This may be through looking for opportunities within a specific sector, or they may have found out about it through an investment analyst covering the stock who then recommends it to their clients. Now the following steps differ slightly from investor to investor, but the general steps are consistent across all. Now, a member of staff or a small team within the investment team will begin preliminary work on the opportunity, building an investment thesis around it and building a financial model and projections and various valuation scenarios. Ultimately, this is then synthesised and presented to an investment committee responsible for approving all investments which that fund makes. It's worth noting here that not every opportunity that gets put forward to that committee is approved. 1 in 5 from this idea phase to investment, or perhaps even higher, would not be at all unusual. If this first stage is approved, the team will then go and do more due diligence. They'll refine the financial model in the various scenarios, they'll speak with the company a lot, and they'll speak with the management team and just refine their views on the business overall. Now, there may be 2 or 3 more stages of this committee, with the committee asking specific questions of the team in relation to the detail within the investment case, and they will then revert with their findings and answers. So upon final approval, the amount which can be invested by the investor will then be agreed, and the institutional investor can only then commence establishing its position. This process can take anywhere from several weeks to several months. And this leads us quite nicely onto the second point here, which is that even once this process has been completed, there's then a period of time over which this position is established. Now, it's also come to my attention that many retail investors, when they make an investment decision, will make their full commitment to that specific opportunity or that specific stock in one go. Now, there are a load of reasons why this is not a good way to invest, and in the newest video series on the Patreon channel, we discuss this in much more detail and make it clear why establishing your position over time can enable you to generate superior returns in the long run, and ultimately that's what professional investors do. Anyway, when the institutional investor commences their investment program, they'll have a target amount of capital to invest into that specific company, and this will then be done over a period of time, a number of days, or more likely a number of weeks and perhaps even months. When it's quicker over a number of days, this is typically in more event-driven situations. Now, this is why you'll see many of the ETFs who report their positions daily grown by such a small number of shares each day. They don't go all in on one single day, and if you are doing this when you invest, then this is something which you should give some careful consideration to. So putting these together, this is why it was always going to be a slow process following the Nasdaq uplisting. However, the signs are here, and a number of new investors have commenced their investment programs, and this is something which will continue to evolve. As always, be patient, have confidence in your investment decision, and let it play out. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, then make sure you're subscribed. Check out the Patreon page for other exclusive investing content. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the different opinions and perspectives, so please get involved. Thanks again for watching, and I'll see you in another video.